Thank you very much. I like to keep the podium between me and you guys so you can't see me do all weird stuff behind it, so I'll tell you that right now. So I am J.R. Simplot's fertilizer nerd. In terms of the hierarchy of nerds, we're at the bottom rung, just so you know that. But you know, it's a fun topic, it's a very interesting topic, and when we go through the presentation, you're going to see, as the other speakers have mentioned, it's a global topic with global implications. So these are the core areas I'm going to discuss today. With only 20 minutes, I'm going to, again, just kind of hit at the high level, and then I'll be available at 2 o'clock at the booth to talk in more depth. Again, like to get together with my fellow fertilizer nerds or budding nerds, we can talk about it. All right, it's a global business, and I like this slide because it's sort of a spaghetti nature of what the trade looks like around the world. Okay, it is, you know, you just see fertilizer just moving all throughout, whether it's, you know, from Canada, United States sending stuff into India. It's just heavy, heavy movement. And you know, when we think about the trade and the rhetoric that's going on right now, you can imagine that if we started erecting barriers and protectionism, think about what impact that could potentially have. Also, though, not just trade, you have to think about, you know, events that happen around the world. You know, a couple years ago, we had issues with high seas off of the coast of Africa. Yeah, okay, that's kind of a random thing. Well, that impacted the phosphate trade dramatically because one of the major producers of phosphates couldn't offload raw materials and load finished product to get it all throughout the world, and it caused a short-term spike in the spring session. So it's those types of events, because of the global nature of the trade, we just have to be mindful of what happens throughout the world. So I want to talk a little bit about, you know, what I consider to be market influencers, and these are macro concepts, but they're also very important. You know, as was mentioned, the strong dollar. I can't stress the significance of the strong dollar. You know, in terms of U.S. producers for fertilizers trying to compete in the global markets, it's really crimped margins and changed some of the behaviors of U.S. producers. But more importantly, foreign producers, particularly those in Russia, where they're benefiting from a weak ruble, even though we've seen depressed fertilizer prices, in ruble terms, some of those Russian producers are absolutely killing it in terms of margin and making money. And because of that, it's created an economic incentive for them to produce like mad. So we've seen the Russians going into markets like India, where they traditionally haven't played, because there's so much margin available for them. You know, the cost position is just very, very favorable. You know, we also look at record production. This was mentioned earlier. You know, record food production. You know, global is just where we have it everywhere throughout the world. I mean, South America is just exploding. They're adding acres. They're getting more sophisticated in their farming. So with heavy supply, we see the natural sort of price erosion in those global commodities. And that's affecting sort of this perception of affordability of fertilizer, I'm sure, as all of you understand. But with that global production is also coming strong nutrient demand. You know, on average, we're expecting like 1.5% to 2% global growth of nutrients. And that's important because what we're also seeing is a lot of new capacity coming online for fertilizer production, all three nutrients. You know, that's what, as the saying goes, the cure for high prices is high prices. Well, from that 2007 to 2014 timeframe, fertilizer prices were so strong, there was billions and billions and billions of dollars invested in new capacity all throughout the world. And what we've started to see over the last year or two, and then progressing into the next 2 or 3 years, all that capacity is going to now start coming online. And we're going to have heavy supply. And that supply is really outpacing the demand. Economics 101, we know what's going to happen there. And then China, you know, a lot of talk about China. And China is very fascinating to me for a variety of reasons. I mean, you know, over 1 billion people, heavy consumers, rising middle class, you have a lot of those narratives involved. But what is disconcerting from my perspective about China is, you know, they want to play on a global scale and have this influence. You look what they're doing in the South China Sea, but they don't quite know how to behave as a global power. You know, they don't have a lot of transparency into their metrics about how things are performing in their country. They certainly don't have an open economy and a market economy. And as they try to manage their economy, they really fiddle with what's happening globally. You know, prime examples, you know, they're the largest consumer of NP and K and the largest producer of N and P. Well, at the same time, they're doing things like, hey, we are going to remove our export tax because we want to try and prop up our production of N and P. But at the same time, they're trying to invoke environmental policy, and they're closing down some N and P producers. So there's this kind of schizophrenic nature about what's happening with the Chinese fertilizer complex and what that's going to do to global supply. And that uncertainty, because they're so large, has the opportunity to create some volatility in the market. All right, so let's talk specifically about N and P and K. So this is what we're looking at for U.S. demand. I have 2017 out here. You can see the U.S. market, as been mentioned before, it's a mature market. There's not a lot of change. We had some increase in nitrogen consumption, but moving into next year, we're going to see nitrogen consumption decline, and that's because of corn acres. I mean, the market is telling growers in the Midwest, hey, let's plant soybeans over corn, so we're going to see a rise in soybean acres, decline in corn acres, and what that means is it's going to lower overall nitrogen production. Because potash is historically pretty inexpensive right now, they're not expecting a big hit in potash demand, and phosphate down slightly, although I think because phosphate is still pretty heavily used for soybeans, we won't see as much of a decline there. Let's talk about nitrogen, but before I get into it, I want to go over some terminology. I am horrible at using acronyms, so I'm going to tell you what some of my acronyms are right now. So NOLA, New Orleans. Many of you may already know this, but the reason why all my price indexes are based on NOLA, or New Orleans, is because it's a major trading hub, right there at the mouth of the Mississippi, getting right into corn country. So it's an index used throughout the world to sort of gauge what prices are doing. So when we look at that, you're going to see NOLA, that stands for New Orleans. And then also, those prices aren't necessarily indicative of netbacks. And a netback is what that price the producer gets after shipping and handling to get it to market. So you can imagine if you're a Russian producer, you have to load it onto a ship, send it all the way into NOLA, and then offload it in NOLA, and then that's the price of NOLA. Well, their netback is going to be less, whatever those handling costs are. All right. So this is the biggest story, I think, on the nitrogen complex is what we're seeing in North America. I mean, the shale gas revolution has just fundamentally transformed the nitrogen market for the world. Really, really inexpensive natural gas, which is a feedstock into the production of nitrogen, has made it very attractive to expand production in the United States for nitrogen. You can see these are all the projects that are scheduled to come on or came on at some point within the last year. But think about this. I mean, a 50% increase in domestic supply of urea. This is material because up until the last year or so, over half of our total nitrogen demand has been imported from the Middle East, some from Canada, China, Trinidad and Tobago. Well, what's happening now with all this new global production coming online, we're going to become much more self-sufficient. And the value of that is you're going to have all that production much closer to demand, so we're reducing our reliance on long supply chains and the timing of when that supply is available in the market. When you have a long supply chain and you're relying on, say ships that might have to ship over, high seas or something, that has a potential to create volatility. Well, with production much closer to home, it's going to reduce that volatility because that product's going to get to market much easier. Not only on the urea side, on UAN as well, we're going to see another 800,000 tons of UAN capacity come online within this same time frame. So, the real story on nitrogen is that because we have all this capacity coming online in the United States, it's going to take some of that volatility out and then obviously increase the overall supply available for growers. So these are the pricing trends since January 2012, and much like the broader commodity market, we've just seen the pricing come down for nitrogen. I mean, things got really out of control there for a while, and now, they settled way down, and I'd say during the fall, they started to rebound a little bit. And that was a function of, with all this new capacity coming online, imports were off. Prices got really low, people backed off on, global producers backed off on production, so we saw a shrinking of supply availability. During the July to October timeframe, we had 1.2 million fewer urea imports during that time. That's a 47% decline year over year. We had an increase in domestic production of urea, but it wasn't enough to offset this. And this is what caused that sort of gradual price appreciation, well, not so gradual on urea, but a little bit of the uptick. UAN, same thing, where we had about 200,000 tons, fewer tons come in from that July to October timeframe. That was about a 20% reduction. Domestic production did not offset that lower import number. But you look at this and you say, okay, well, we're going to have Port Neal is now online. Okay, that's a new CF facility. They're going to be producing at full rates for Q1. Lower corn acres, projected lower corn acres. I think what we're seeing is that I don't expect a lot of price appreciation or rapid volatility come into the market for nitrogen. So that's good news, unless, of course, you're a nitrogen producer. All right. So let's talk about phosphate. Phosphates are near and dear to my heart because as a producer of phosphates at JR Simplot Company, I study this one very closely. And this market has a much different dynamic than nitrogen because up until recently, we had the chunk of the global production, at least with this, as far as Mosaic being a domestic producer, they were the largest producer in the world. That's starting to shift now with some other global producers. But what we've seen on the phosphate side is volatility has evaporated from the pricing of phosphates. I mean, it's been hovering in this $300 at NOLA range for the last year or so. And only recently, through the latter part of December, did we see any kind of price appreciation. And that volatility is just, we've had so much capacity, particularly in North Africa. The Moroccans have added millions of tons of new capacity. I mean, they hold 75% of the world's reserves. And they've just been ramping it up. In addition to that, the Russians have expanded their capacity. They debottlenecked some facilities. So they're producing a lot more. But over that time, it's just been capacity, capacity, capacity. So there's a lot of supply on the phosphate side. What concerns me going into the spring is we've had a larger number of exports from domestic producers in the United States through the fall and in the winter. And a lot of exports of U.S. produced phosphates, and we've been relatively flat on imports compared to the previous year. And also, because of the prices have been down and flat, there hasn't been an urgency to take supply. So I think the chain, the retailers are pretty low on product in general. And then with lower supply, I think this presents a greater opportunity to have some price volatility for the spring season on phosphates. A little bit different scenario than what we're seeing on the nitrogen. So I think that's just something to be wary of, that there is the potential for some upside price appreciation and volatility through spring. Yeah, that's most of that one. So let's talk about potassium. I like to refer to this as the boring nutrient. Again, no rub for people in the potassium or potash business, but it's boring. And it's boring because it's a cartel. It's controlled by the cartels. You got three major producers out of Canada that control it, PCS being the largest, a smaller one here in the United States, smaller mine with Intrepid, but there's just not a lot of movement. We saw the prices just decline steadily over time. They bottomed out about that same time that urea bottomed out, and they've started to bounce back, and that's just because the potash producers have been managing supply. They've been shutting down mines, but we also have some new capacity coming online that are more efficient, lower cost, and there is an economic incentive there. Hey, if it's a lower cost, we can certainly produce more and maintain margins. So I think we're going to see limited price appreciation here. The other notable item, again, is the Russians. The Russians a few years ago chose a volume over price strategy. They broke up their own little cartel, and since then they've just been producing. So, I think when you have this new capacity in North America, low-cost capacity in North America coming online in conjunction with the favorable production economics of the Russians, that's going to act as sort of gravitational forces pushing down any potential upside that you might see in potash. So again, it'll continue to be the boring nutrient. So as far as takeaways, it really is. I mean, all three have gone through this capacity expansion over the last few years, and it's going to continue for the next couple of years. And that capacity expansion will, test what we call the cash cost of producers. Some of those lower or higher cost, less efficient producers may shake out, and that could cause some temporary supply disruptions. I mean, we certainly don't know what China's going to do, but I think overall, with the capacity expansion and all these available nutrient tons coming on over the next few years, it's just going to limit, I think, any rapid price appreciation or volatility, because the market will respond pretty quickly. But I also want to caution that, just like all agronomy is local, a lot of pricing is local as well, because if you have folks, if your retailer isn't taking positions and they're trying to delay, and it's an early spring season or logistics are constrained, I mean, that can cause very regionally based price spikes. So you just have to be mindful of that, because if we can't get that supply in place before the demand comes, that things start thawing out, you could see some price uptick. Government policy was touched on before, Trump, the rhetoric, everything that's going on. This one I'm really worried about. It's the black swan event. Somebody feels like their feelings get hurt, and they decide to slap a tariff here and there, and we have all-out trade wars. You saw the spaghetti chart. The interdependency that exists among the world's economies is great, and any disruption of that is going to be felt immediately, and that is a genuine concern. Also, on the subsidy scheme, almost half of the world's fertilizer consumed is subsidized in some form by a government. And as economies struggle, those subsidies can be cut, they can be increased, and that can really change the demand side characteristics. India famously, they had put in a price cap for phosphates back in the 2010, 11, 12 timeframe, and it just caused this massive spike in demand, and that's what helped drive a lot of the prices up. So governments can have an outsized influence on fertilizer prices, more so than you know. So it's something to just pay attention to. Yeah, and then finally, the U.S. dollar. I'm not going to beat that one up, but a strong U.S. dollar and a continuingly strong U.S. dollar will encourage foreign producers to send product to the United States. The U.S. market, the North American market, is very it's very fluid and it's liquid in terms of just a lot of buyers and sellers. So I think we could potentially see a lot of product if the dollar stays strong. And all that bodes well as a consumer of fertilizer. Is I think the key takeaway is there's going to be a lot of supply available, but don't wait too long to lock in your prices, or you can get stung because of local demand and logistics. So that's everything I had. I finished 2 minutes early. I'll be available at 2 o'clock. To nerd out with any other fertilizer nerds, and we can go from there. All right, thank you.